Hello, everybody, and welcome back. So today we're going to be talking about what's in the future and what's next for the M&A industry. So to kick off, Paul, really wanted to start with talking about what some of the biggest trends you're seeing in the M&A industry right now and where that could lead.
Yeah, sure. So, I think it's been a very interesting industry to be involved in for the past 15 years, and I think like probably every industry, you see change all of the time. So, I think what we're certainly seeing more of, and I think certainly as we go into the future, we're going to see this more of a trend is really an increased interest in technology and software as a service type acquisitions. I guess just because of the very digital world that we live in, I guess using technology to automate, make things more efficient, et cetera, is definitely something that we're seeing right now. For example, within our own private equity firm, we've actually developed our own software that assists in sourcing direct to seller M&A opportunities. And I think the reason we developed our own software is that we didn't actually feel that there was anything out there that quite did everything that we wanted it to do. So we built our own. And I know that that's not something that everybody can do. But certainly if people are working with us on like a joint venture basis, for example, then obviously we have this sort of sourcing software that probably can condense finding 1,000 opportunities, which done manually could probably take 30, 40 hours of research and scrolling online, etc., where this sort of does it in 30 minutes. So significantly reduces the amount of time that we're having to spend on sourcing. So I think that that's certainly something that is likely to continue. And I think just generally, when you're looking at sort of acquisition opportunities, there is very much a growing focus on sustainable and green investments. The whole ESG piece is a big consideration. Certainly something that's very much on the agendas of major investors. So when we're building groups of companies and we're making acquisitions, we're looking at all of that and how we can sort of build that and make it then a more attractive sale when we built the group and we're looking to sell. If you have that in the mix as well, then it's certainly something that's very much on the agenda of investors.
Okay.
So I think they're probably the two biggest trends. I mean, I could go on and talk about many different
Mhm.
things, but I guess they're the things that we're seeing in terms of sort of changes and trends at the moment.
Okay. So you mentioned about investing in your own software. I mean, talk a little bit about that, what it can actually do, what sort of parameters can it, like how focused and key can it be, and how does that relate also to technology changing the process? I mean, I presume that's quite a big time-saving thing, and there's probably, 101 different AIs out there at the moment that I don't know how much are being used directly within M&A, but what do you find?
Yes, yeah, I mean, it depends on what country you're operating in, but if you're in somewhere like the UK, the level of data out there in the public domain is pretty good. I can go onto the company registry and I can look for companies in certain industries of a certain size with a certain financial profile, maybe with a certain profile of age for an owner. And effectively, what our software does is that it rather than that being a manual process of looking up every single company, I can put in my criteria. It will then scrape the internet and look for those sort of opportunities and literally spit out a spreadsheet with all of that data, name of company owner, and then obviously we can do our own sort of cold outreach with all of that. And I think certainly AI is very much out there at the moment. I mean, we utilize it ourselves for generating content for researching industries, for example. What might take somebody several hours to go and research a new industry that we're interested to potentially get involved in can literally be done within seconds, and that's really quite powerful and saves obviously quite a lot of time.
Okay.
If you're interested in mergers and acquisitions, we have a free to join community of deal makers around the world where we share knowledge, expertise, deals, and joint ventures. I produce regular content there, and it's the first place that you can see it. So, if you'd like to find out more about this and how we can joint venture together, I guess the vast majority of deals that we have done have been with joint venture partners. And I guess to get to 100 plus deals, there's only so many hours in the day. So, by sharing the work with like minded others, we can increase that bandwidth. So, to learn more about this and to join our community, visit buybuildsellprogram.com. Can I ask you a favor? If you like this content, then please do subscribe to the channel to receive more content like this as we upload it. It helps our channel and shares the message with like-minded deal makers. It also helps me to connect with our audience and bring you more content that you can watch.
Okay. So you did sort of briefly touch on ESG, so I think it'd be quite interesting to see how that does relate to M&A strategies, and I don't know whether it's impacted your journey so far, but what do you feel towards it?
Yeah, I think it's very much on the agenda. I've been involved in the capital markets, and a lot of corporate and institutional investors are very much interested in that sort of side of things. I think what we're seeing is very much an increased demand for acquisitions in sectors with sort of strong ESG practices, like renewable energy, for example, or more sustainable manufacturing. And I think the importance of ESG is really to, you know, what we're looking at, certainly from our perspective, is we want to assess the environmental impact and the social responsibility of companies that we might get involved in. And I think, businesses with that sort of strong ESG practice may well then attract higher valuations and certainly more buyer interest.
Okay, interesting. So what are some of the industry specific trends in M&A that we should be looking out for at the moment?
Well, I mean, I think, the world that we live in is massive, and there's, I say that there's deals everywhere. But I think, our model, we call it buy, build, sell. So we buy a business in a fragmented market, we build it both organically and by making tactical and strategic acquisitions, and then ultimately we look to sell. So effectively, what you're doing is you're consolidating certain industries, and I think what we're seeing, and I think we'll continue to see, is that there is quite a lot of consolidation happening in the sort of healthcare and pharmaceuticals space as they seek efficiencies in that whole sort of R&D and the sort of distribution. I think there's also a big growth in things like cybersecurity, data protection, all of those sorts of things. How do businesses prioritize that digital security? And then from a sort of real estate and infrastructure point of view, I think we're seeing there's a lot of shifting from sort of, towards that more hybrid work environment and sort of, more remote workforces to improve productivity, make businesses more efficient.
Yeah, I definitely have a lot of Zoom calls with people that are in those tiny little sort of Regis building cabins that they sort of build, don't they? Like the pod after pod after pod, but it's decent flexible working, so you can be here, there, and everywhere, and also work remotely. And
Sure.
one thing that I'm quite interested in is that there's an increase in private equity involvement in the M&A space, but also I think I don't know if you'd said to me 15 years ago, what's my thoughts on private equity? It is multi-billion dollar funds and stuff, and they're only interested in massive companies, and it was, companies behind big tech firms and stuff, where I think that's definitely changing across, well, the whole landscape of the world right now, that there is smaller, more focused versions of it. But how do you sort of find it?
Yeah, so I mean, I think what we're seeing at the moment, and certainly from our own point of view, our own private equity firm is very much focused on buy and build strategies where you can group together multiple companies in a sector, consolidate, and then you can create synergies, whether it be cross-selling, buying power, economies of scale. You've got sort of duplicated head office functions. There's potentially software and automation, and we've already spoken about AI that can potentially make a business more. More efficient. And I think there is certainly more, there's a more aggressive competition for, profitable targets, and ultimately that then drives up valuations and potentially the complexity of how deals are done. And I think we're certainly seeing as well, like a rise of, permanent capital, private equity funds looking for really long-term investments rather than, sort of forced exits or sort of short-term buy and build type strategies.
Okay. What percentage would you say, I mean, I'm here in the UK, is of the, I suppose, companies out there that would be under the small and medium enterprises versus the large corporations? You mentioned obviously about building groups together, presumably of smaller companies like that that can have a larger sort of feel in the marketplace, but will still have that strong local independent brand. Is it a big split, or is it starting to shift and change?
Yeah, I mean, the backbone of, you've mentioned the UK, but it's a similar in the US and Australia where we're very active. The backbone of the economy is those SMEs. So, whilst we look to consolidate industries and build larger groups of companies to create that greater value, about 90% of, businesses operating in those countries are those sort of typical SME, owner operated business, long established, been around for a while, consistently profitable. And I think that the typical SME, a good one, is small and lean and able to adapt and change very quickly. Whereas if you're a large corporate business, you've probably got bureaucracy, several tiers of management to get through to make decisions. So I sort of almost use the analogy. It's a bit like turning a steam tanker. In a large corporate, it takes a long time to maneuver and change and adapt. Where in an SME, you can make a decision in the morning and be implementing it in the afternoon. And I think that that's what drives that whole sort of entrepreneurial spirit when you're in the sort of M&A space, because you can see opportunities and you can unleash those opportunities very, very quickly.
Okay. And I would imagine there is still, I mean, when the economy here in the UK and the US has been good for many years, since probably World War II, once society was built up. But a lot of people were encouraged to set up businesses probably back in the 70s and 80s. And a lot of those companies are still standing and doing incredibly well. But there must be a lot of business owners at that retirement age, or they've passed it down to next generation and they're at retirement age. But there is a lot of people that sort of feed back to me that there's a lack of buyers in the market, which is surprising really, given that some of these businesses are incredibly reputable. Maybe they're just not sexy enough to be interesting to, I don't know, the world's going with technology and AI, and that's exciting and maybe more valuable. But in the UK, we still have roads here. We still have things like construction that needs to tick by that will never be replaced by AI. Well, probably not in our lifetime. Are you finding that there is still a big frustration for people at that retirement age that don't have an exit strategy?
Yeah, so we did some research, and basically 23% of SMEs are owned by what I would describe as the baby boomer generation. So, it started somewhere. They've probably spent many years building up a business. And then, naturally, when you get to a certain age, you're going to be contemplating potentially retirement. But the problem with the SME space is that it's very high risk. And I guess that's why there's not many buyers out there. The vast majority of sort of business startups fail. I think 4 out of 5 business startups in the first 5 years fail. So, only 1% of them make it to about $1 million in revenue. 0.1% make it to $10 million in revenue. So, the chances of success are very, very slim. And I guess that's what then makes it risky. Typically private equity don't get out of bed for less than 100 million in terms of deals. So that gives opportunities for people like me and you to be able to go and acquire those companies and put them together and drive those synergies and create that larger group that ultimately then creates more value for everybody concerned.
And is there correlation there for, I suppose, also people that, I don't know, if you were looking to sell your business 10 years ago, I'd imagine it would probably be an easier journey. But over the last 10 years, we've had quite a lot change in the world, a lot of things that people didn't see coming. But the current economic climate is, well, if you look in a lot of the westernized worlds, I think could be influenced by certain things that may or may not happen over the next few weeks. How are you finding the current economic climate, and how do you think that might influence M&A as we're going into 2025?
Yeah, so I mean, I think in the UK we've seen a change of government. You've obviously got the US election. There's been a lot of political uncertainty, and I guess that then creates various challenges for businesses. In the UK, for example, we've seen some recent tax rises that is going to ultimately create an additional cost to businesses. So I think it is more challenging to do business. And I think if you're certainly at that point in your career where you own an SME and you're looking to potentially sell it, I think we're in for a fairly challenging time. And is it better to think about getting out now before it gets too tough, or probably spend the next 5 to 10 years carrying on running the business, navigating those sort of challenges, and even if you get through those challenges, there'll be something else. 4 years ago we had the global pandemic when the vast majority of businesses were forced to close down. in lockdowns, and it was very difficult to trade. um and now we've seen sort of political uncertainty, and in some jurisdictions, tax rises, additional costs and regulation, and all of those things I think are just going to set to continue. So yeah, I think they're the immediate challenges.
Okay. I was talking to a close friend the other day who they bought their first property. I think it was about 4 or 5 years ago. So obviously interest rates were very different, and they're just looking at the process now of what they do, because I think the best deal they can now find, now that the mortgage is due for renewal, was I think it works out like another £350 a month or something, which is an insane amount of money for the average person working your 9 to 5 to find. But I think loans, financial related things are becoming very, very expensive. Do you see that impacting, I suppose, how deals are structured moving forward? So there used to be a whole host of ways of being able to finance deals, and it used to be relatively cheap. Is that going to change how, I suppose, acquisitions might be in the next sort of 3 to 5 years?
Yeah, I mean, because of the high risk nature of SMEs, if you run a successful SME and you've been doing that for many years, and then you're looking to, ultimately exit, then effectively there's a lot of goodwill that's tied up in you as a business owner. It's your name above the door, you're making the decisions, it's your relationship with staff and customers. So if somebody else is going to come and take over from you at some point, then there's obviously a big risk that custom can go somewhere else, suppliers get a bit jittery, et cetera, et cetera. And that's very much then reflected in the sort of, the sort of deal structures, because what you tend to find is that the vast majority of deals tend to be a sort of leverage buyout type transaction. So, you leverage the assets of the target company, that generates a down payment, and then there's going to be some form of seller financing or earn out type of structure. And that's traditionally how we've seen those SMEs sort of change hands. And it's not unique to just SMEs. If you look at some of the largest deals, I mean, Walmart sold the Asda supermarket a few years ago in a $10 billion deal, which was principally funded by a consortium of banks. And I guess because of the nature of these types of transactions and the risks associated with it, what we're certainly seeing is that lenders are being a lot more cautious, and there's a lot more sort of hoops to jump through, if that makes sense. But it's also reflected in the cost. That type of lending is very, very expensive. So I think what we're seeing is, we're working with sellers to try and be more creative. How do we get to a point where they get an exit and we get the acquisition? But you have to be a lot more creative, I think, in the way that you can potentially structure these types of deals, so that you're not just loading a business with a load of cost that then just becomes unsustainable.
And do sellers sort of accept that easily? Because again, I suppose 10, 15, 20 years ago, if you were selling your business, things would have been very different to what they are now. But I've heard you sort of coin the phrase of ultimately the seller becoming, I suppose, the bank, was it? How do they find that?
Yeah, I mean, there are not many lenders out there that will lend to a brand new management team, regardless of their track record. I could be the most experienced individual in a particular sector, but what I don't have is any experience of particularly running that actual business, and that's very much then reflected in sort of the availability of funding, and assuming that you can get that funding, then obviously it becomes quite expensive. So I think for most business owners, it tends to be a once in a lifetime experience. They spend many years building a business, and then they come to sell it. We might buy and sell companies every single day, and we're quite used to it. But from a seller's point of view, it's probably something that only ever happens once in their lifetime. So, they haven't sold a business before. They don't necessarily know how the process works. So, it's partly education, I think, in terms of, trying to get them to understand how the whole process works, and the risks involved for all parties, and how we mitigate those risks. It's not a question of somebody's got a big full bank account and they just write a check to acquire a business. It just doesn't work like that. So yeah, pretty much every deal that we do, pretty much every deal I see in the whole sort of SME space is going to have some form of earnout or seller financing structure, because basically the banks aren't there to lend. So if you want to get an exit, then this is one example of how we can be, creative in trying to make a deal work.
So given that, do you think it's quite important to have that sort of industry specific expertise going into whatever the sector might be?
Yeah, I mean, I think, certainly from our point of view, when we acquire a business, we're always looking at the quality of the management team because, it's very important that when the business owner leaves, that there is, that continuity there in terms of the people that are going to be running the business and have that particular expertise. I mean, we've got to a point now where I think we've done deals in 32 different industries, and I certainly wouldn't call myself an expert in all of those 32 different industries, but some of the first businesses I got involved in were in the real estate and recruitment space because that was what I had experience of at that particular point in time. But now it's very, 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 very important to us that we work with businesses where we have that industry expertise, and where it doesn't exist, we're certainly looking at how we recruit that in to ultimately secure the business and make sure that it continues to run.
Okay. So, I mean, you did touch on it initially about sort of the software that you've invested in, but what are some of the trends that you're seeing in deal sourcing? Because I presume that must be something that can completely keep evolving every year. I mean, obviously, you've been doing this for 15 years. How do you see that in the future now? Because obviously, with intelligent softwares, with AI, with all the different versions of social media that didn't exist many years ago, how are you finding that, and what's your sort of presumption that will they do to sort of shape the future of deal sourcing?
Yeah, so I think if you're a deal maker, I mean, I remember this when I first started looking to, ultimately make acquisitions. I think you think, well, where are businesses for sale? I'll go and look at broker sites, for example, and I'll look for businesses that are listed for sale. But the vast majority of businesses that do list with a broker don't sell. And I guess, look, when you've got somebody involved that ultimately is, charging some sort of fee for, listing that business, they've got to justify those fees. So what we find is that there can be almost a distortion between reality and maybe what a broker might do. So I think we're certainly seeing there's more of a shift to sourcing, off-market deals. Buyers are looking for unique, under the radar opportunities. They want to be sort of going direct to seller rather than, via any sort of corporate advisor or broker. I'm not saying that those types of deals don't happen, but certainly we're seeing more of a shift to connecting directly with the principals of those businesses because ultimately they're the decision maker. And then I think there's also a role that we're seeing from sort of AI. There's many AI driven platforms that help identify potential acquisition targets based on a specific criteria. And I guess as we go into the future, I think we've seen this particularly more recently. I think there's more importance of building those sort of strong networks and relationships as those sort of traditional channels tend to evolve.
Okay, so I wanted to touch on emerging markets as well. So the world's become a very collaborative place, and I think certainly since sort of COVID, it's sped up the remote working. I mean, you touched on that earlier in the conversation, and I think being able to look further afield than what is just in your own country of residence is quite interesting. Do you think there are any emerging markets out there that you see as hotbeds for M&A activity?
Yeah, definitely. I mean, I think, if you look at sort of Southeast Asia, Latin America, Africa, they're the emerging markets where, you're seeing economies expanding rapidly. I mean, I think there's what, 1 billion people that live in India, over 1 billion people live in China. Indonesia is a heavily populated country. We're currently building a group, for example, in the business services space. So your sort of typical business process outsourcing. And, most of the operations within that business currently are based in the Philippines. Which is a rapidly expanding economy, and I think there's a very much a high interest in sort of tech and e-commerce businesses in these regions. I guess due to the sort of whole digital transformation that we see in the world that we live in, and I think that's why the emerging markets present quite unique opportunities for savvy investors, but equally very risky too because they're not potentially some of those markets I've mentioned are not as developed or as established, and when you're in a fast growing economy, that then presents a different set of challenges than you might see if you're doing M&A in the Western countries like the UK or the US.
Mm, okay. So I know you've obviously developed a lot of links around the world, haven't you? With I think you sort of refer to having a man on the ground in most places and expertise in a lot of places. And what sort of advice would you give to people that are sort of listening to the content that you're putting out there, but how they actually position themselves for future M&A opportunities?
Yeah, so I mean, I think whenever I've learned this probably the hard way. If you're wanting to do something that you don't have experience in, then I'm a strong believer in finding somebody that's been there, done it, worn the t-shirt that can guide you on that journey. So ultimately, finding a mentor or a coach that can help you navigate through not just the understanding, but also potentially some of the risks and some of the mistakes that many people make. If you're working with someone that's been there, done it, and experienced all of those things, then obviously, as long as you're prepared to take feedback, then you're more likely to, be more successful. So I think that would be, probably the biggest thing that I've learned in my career is, actually working with someone that's done it. One of my earlier mentors was somebody that's done hundreds and hundreds of deals, and I've learned so much from that person. And surrounding yourself with people like that, I think is invaluable, rather than thinking, I can go out and learn this myself and try and do it. Most people, when they go and learn to drive, they don't go and try and self-teach themselves. They go and find an instructor that can teach them and share how to drive a car. And then obviously with experience, the more times you drive a car after you've passed your driving test, the better you become at it. And I guess M&A is no different.
Okay, so just to almost sort of wrap this up a little bit, but I suppose, in your opinion, if you're going to move the clock forward 5 years' time and you're looking back from this conversation, what do you think will be some of the biggest changes that we actually see in this industry?
Well, I think certainly, there's going to be tech-driven advancements, which is basically going to make the whole M&A piece more efficient and more accessible. I think there'll be an increase in, sector-specific consolidation. We've talked about a few industries already, but, industries will face new challenges and new opportunities, and there will become those opportunities to consolidate. And as we started this conversation, I think the evolving role of the sort of whole ESG piece, remote working, hybrid working, and the sort of changing global economies, and how deals are evaluated and structured. I think they're all of the sorts of things that we're going to see over the next 5 years as we go through this change.
Okay, perfect. Well, great catching up as usual. And yeah, I think it's been a really interesting conversation, because I think for me personally, in the way I view this industry, if I look 5 years ago, then COVID happened, and then you look in the last sort of 12 months or so, it's been such a ever continuing changing industry. And I think just AI came out of nowhere, like what, 12 months ago, properly, that we all sort of heard about it, and trying to just keep up with those sorts of things and how that can revolutionize things. I mean, the software that you obviously spent a lot of money in investing in was something that you thought was very important a couple of years ago. And I think things like that are the start of a lot of things. I know that you're working on your own AI as well, which I think will be really exciting to talk about at some point when it's ready to do so, and what that can do for people that we obviously work with, of course.
Cool. Okay. Well, yeah, great to catch up, Ben, and yeah, chat through those things. And I'll see you on the next episode.